Arbor Realty stock is by far the biggest dividend payer in my portfolio, despite the fact that it is only 5% of my total investments. Thanks to its massive dividend yield of 12.6%. And the great part is that they keep on increasing their dividends, 11 years in a row already. But we can't ignore the fact that the payout ratio is at 127%. So is ABR a potential dividend trap or a great asset for your dividend portfolio? And let me tell you this, my opinion on ABR has changed drastically, even to a point that I might consider to sell it if things don't improve in the near future. So let's dive into the earnings first to see what happened. The first thing that I want to get out of the way is the fact that Arbor Realty Trust is a specialized real estate finance company. And this is very important. It is not a REIT, but a finance company. Looking at the earnings, we see that they beat on both EPS and revenue. So we're off to a great start already. Diving into their earnings presentation, we see the company highlights, where they reported a distributable earnings of $0.43, which matches the dividend. So dividends are covered, but there's no margin of safety whatsoever. But there are two really important numbers up next, which is the debt to equity ratio and the cash position. As of right now, ABR reports a debt to equity ratio of 3 to 1, which is 25% lower versus 2023. A great improvement for the company, so this is a huge milestone in my opinion. On top of that, they report 600 million in cash and liquidity, also looking pretty good. Looking at the income statement year over year, we see that interest income is actually decreasing, which is of course not a good sign. However, a lot of things have changed, so keep that in mind. Interest expenses decreases year over year, but the margins were better in 2023 compared to 2024, a small difference of 44 to 46%. And down the line, this results in a much lower net income and net income per share. So this is definitely something to keep your eye on. Earnings per share are much lower versus the dividend declared. However, the distributable earnings were declared at $0.43, also down year over year, but at least covering the dividends for now. And now that we know a bit more about this company and the recent earnings, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. ABR is a 2.8 billion market cap company. PE ratio is at 9.4, which could indicate that they are undervalued right now. Later in this video, I will show you my 3 price targets for ABR stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 663 million, and in this graph we see that revenue went up in the long run. However, most recently the revenue is coming down quite a lot. In the past 5 years, margins have come down quite a lot, which worries me a lot as well. To me, this doesn't look good at all, especially in combination with the declining revenue. EPS is following the same pattern as the margins and the revenue. Keep an eye on this number as well. Analysts expect a big decline in EPS with minus 11% this year. This could, of course, massively impact the business, especially if you're in it for the dividends. From 2026 on, it is expected to recover. For the revenue, it is a pretty similar story, but the decline is a little smaller with 8%. And don't get me wrong, this could be a huge impact for the business. In 2026, it is expected to see a massive jump in revenue again. Current ratio is at 4.3, which is looking way too high in my opinion. So definitely keep an eye on this number. This could be a potential red flag. Diving into the debt, we see that right now ABR has 10.4 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ABR has roughly 700 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up and down in the long run. But in general I would say it's going up. So this comforts me a little bit, there's at least some cash available. Shares outstanding are increasing, which is not a good thing. But companies like ABR increase shares to raise capital, so I don't mind that much. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 12.6%, which is an insane number. And for many people, the main reason to own ABR stock. Annual payout is at $1.72 and payout ratio is at 100% as we have seen in the investor relation earnings. And not the 127% displayed here. And don't get me wrong, this is still way too high. I prefer a range of 70 to 85% with these type of companies. The 5-year growth rate is at 8.5%, which is an insane number, on top of the already 12.6% dividend yield. And they increased the dividends for 11 years in a row, which is also very impressive. And if you take a look at these numbers, the dividends paid since 2015, you see that ABR did increase the dividends at a decent rate overall. However, growth is slowing down. In this graph we see the expected dividends in 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to stay flat from here. As of right now, I have mixed feelings about this dividend. But how about the historical returns? Was there any value in holding ABR in the past years? I decided to compare ABR stock with the overall market, in this case the S&P 500. And on the 5-year chart we see that ABR underperformed the S&P 500 by a significant amount. In total, ABR returned roughly 60% including dividends, versus the S&P 500 sitting at 95%. The interesting part here is that ABR was capable of crushing the S&P 500 a few times, but always went down only short after doing that. On the 1-year chart it looks pretty different, with the S&P 500 returning 27%, while ABR is having an 8% return. On the 6-month chart it is again looking pretty interesting, with a tie for ABR and the S&P 500. On the 1-month chart we see that ABR dropped massively in returns to minus 6%, while the S&P 500 is also at a minus 2%. So bottom line, the S&P 500 beats ABR in both the long run and the short run, but there were some interesting peaks throughout these periods for ABR. So could this be the perfect time to buy ABR stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 40, 42 and 44%. And for the free cash flow margin I'm putting in much higher numbers, based on the current situation. For the PE ratio and price to free cash flow I'm putting in 7, 8 and 9. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want a higher margin of safety with this company. Right now ABR stock is around $13 to $14. I hit analyze and we see a lot of green numbers. We have a low price target of $10 to $16.5. We have a mid price target of $12 to $20 and we have a high price target of $14 to $25. And to me, the low price target is the most justified here, indicating that this stock is kinda in the middle of this range right now. So my final conclusion is that ABR is a high risk, high return company. I'm trying to keep them under 5% of my total investments. And it has to be said that I changed my opinion on this company as well. In my previous videos, I'm aiming for the mid to high price targets, but the company is struggling and there are no signs of improvements yet. Dividends also look really interesting with almost 13% dividend yields. But that payout ratio is what worries me a lot. Usually when a company stops increasing their dividends, it is a yellow flag. There's always a reason for that, and most of the times it's the fact that growth is slowing down so they can't keep up. To me, it feels that this year is a turning point for the company. Analysis expect a bad year for ABR, and to be honest, I do so too. So this means that I'm keeping a close eye on the company and the quarterly updates we get. For now, I'm holding ABR, but things have to improve in the near future, otherwise this stock becomes a potential dividend trap. In the meantime, I'm happily collecting the dividends. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and that did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.